Hi, I'm Christian Chan, CEO at AssetMark. One of my favorite things to do is talk to investors at various AssetMark events. Recently, I've been getting a lot of questions about interest rates, so here are some key takeaways. At the last Fed meeting, the Fed decided to hold short-term interest rates at 5.5%. They've held the Fed funds rate at this level since July of last year in hopes that inflation would continue to fall without a material slowdown in growth. And so far, that's what we've seen. Since last July, the Fed's favorite inflation measure has fallen from 4.2% to 2.8%, while growth has remained steady. Now, the Fed wants to see inflation fall a bit further and hit their 2% inflation target, but they've indicated that they're willing to be patient and even cut interest rates before they reach their inflation target. To me, that's a dovish sign, and it's good for growth and good for equities because all things being equal, equity markets like lower interest rates. This brings me to my second point. This year, we've seen something quite different. Since the start of the year, market expectations for interest rates have actually gone up by about half a percentage point. Normally, an increase in interest rate expectations causes higher equity market volatility, maybe even a small sell-off. This year, the markets are up by about 10% despite an increase in interest rate expectations. So why did this happen? In my view, the market is recognizing that the opportunity for corporate profit growth today looks better than it's looked in a long time. AI, biotech, GLP drugs, the rebuilding of US manufacturing, I could go on and on about the medium to long-term growth tailwinds we're seeing in the markets today. So where does that leave us? I still think we're in the later part of an economic cycle, but you need to stay invested in order to take advantage of these growth tailwinds. Simple risk management strategies like seeking diversification or adding a bit of reactivity to your portfolio can be really effective in this investing environment. As always, please reach out to your financial advisor if you have questions or concerns. Thanks for watching this 2-minute update. We'll talk to you next month.